What if my investment fund or my super fund specifically goes broke, whether it's AMP, Macquarie, etc.?
Okay, so again, let's sort of get to the specifics of this. So a super fund can't, well, generally speaking, a super fund can't go broke, because to go broke means your liabilities exceed your assets. Now, super funds, generally speaking, can't borrow. There's some exceptions to that, particularly with self-managed super funds and things like limited recourse borrowings. But in a general thing, if we took someone like Australian Super or Macquarie Super or whatever, then they're not really allowed to borrow, not in a substantial or meaningful long-term kind of way. So again, for a super fund to go broke, these are the fund itself, the assets of the fund that are there for the members, gets back to the same as a share market thing, right? So the underlying assets need to go broke. Now, that's possible where those assets themselves, their balance sheets, where their assets could exceed their liabilities. So again, we saw this, for example, in the GFC with things like property trusts. So where you'd have a trust and the trust had some gearing, and you get this situation where the property values got smashed basically. And so in some circumstances, the value of the properties dropped below the liabilities, and therefore the trusts were basically not worth anything. Or you had some credit funds where the loans weren't repaid and they sort of fell over. So in those situations, the underlying assets of those investments were zero. But in terms of a total fund, generally speaking, super funds must be diversified and well diversified. So even where funds, super funds, had assets like that, say through the GFC, for example, very few of those, particularly if they were large public funds or industry funds or whatever, any of those funds that had anything like those assets, they tended to represent a very, very small portion of the total. So it's a bit like I owned the whole index and a heap of companies went broke this year, but I didn't notice it because on aggregate they all went up. So yes, I owned some things technically that went broke, but the other ones made up for it. So similar thing in terms of super funds. So, if someone like Australian Super or a Macquarie fund or an AMP fund or whatever, in their diversified fund or whatever, had a little bit of private equity or a bit of high yield or something, and where that happened, that tends to be a very small portion because they're well diversified. So for the whole fund to go broke, again, all the assets they own, all the bonds, all the property trusts, all of the infrastructure assets, all of the companies they own all around the world, they all have to go broke all at the same time. So again, nothing's impossible, but anything like that has ever happened ever before. So where you hear about, so-and-so lost a lot of money in their super fund or whatever, that's always they owned one of those assets in a big chunk.
Right.
And that went broke. And of course they did lose all that. They had a heap of money in property trusts or that heap of money in a particular type of investment that went broke. But a large, well-diversified, well-invested fund, no. The second thing is we need to separate the fund itself from the administrator. Okay, so for example, we take a company like AMP, who've certainly been hammered a lot in the last couple of years with things like Banking Royal Commission and the outcomes of that. And AMP as a company, as a trading company, again, while it's relative, if you look at their current balance sheet and their economic and their sort of asset position, like it's foreseeable for any company, you could find ways to say, that this and this happened, they could go broke. But AMP at the moment are a trading company and they have some degree of solvency. So let's assume though, if something goes even more wrong for AMP and they can't trade anymore and they go broke as a company, as an entity, one of their assets is their ability to charge fees for running the super funds that they run. Okay. And so that is an asset that the administrator, when they come and sort of, administer the company that's gone broke, they would say, well, that's an asset. We can sell the right to charge that fee to someone else. So just as when AMP bought AXA, for example, what they really acquired in many respects is they acquired the right to charge the fees for the products that AXA had sold and was charging fees for. So now they're getting those fees for the old super funds that AXA had or the insurance policies or whatever. So that would be an asset. And so AMP, the liquidators of AMP would probably then sell that and say, they'd sell it to IOOF or someone else might buy it, right? And the price they got would determine the return that AMP shareholders got when they carved up AMP. But the people whose super was in AMP, that's kind of like it's a separate, it's held by a custodian. It's got nothing. It's not an asset of AMP. AMP can't dip into your super fund because they're struggling a bit this month. Right? They don't physically have access to it. That money's held by a custodian. They administer it. They sort of shuffle the paperwork, if you like, but those assets aren't available to them. So again, when we've seen in the past, people losing all their super through some sort of fraud type activity, it's generally because it wasn't a major, APRA regulated it was a self-managed super fund, something where, you didn't have APRA looking over their shoulder and doing regular sort of checks, and you didn't have that kind of layers of support with a custodian separate to the investments, investment managers and those sorts of things. So if AMP, the listed entity, went broke, again, its share price isn't necessary. It doesn't drive that. It might, if their share price is very, very low, they might not be able to raise capital they need if they needed to re-inject into business. But if they've got the capital they need and they're operating as a going concern, they're not going broke. And even if they did, the funds that they run, are unaffected by that. Now, if in your super fund in AMP you own AMP shares and AMP goes broke, then you'd lose that amount of money. But I doubt too many people would be in that position. Certainly none of our clients are in that position.